What's up, guys? Cody Editon here with Rapid Response Roofing Podcast.
And we can talk about maybe some fun things that I think are pretty universal when it comes to folks getting into the roofing industry. Hey guys, welcome to the Rapid Response Roofing Podcast. I'm Justin. I'm here with the owner of the company, Cody Etherton. Today, we're going to talk about some of the finer points of insurance claims. We're going to talk about RCV, ACV, your deductible, and we're going to talk about code upgrade, which is also called ordinance and law.
Okay. Yep. Yeah, guys. So let's get into it. Why don't you go ahead and start with the RCV,
Sure.
versus the ACV breakdown? I think we may even have a little bit of a different explanation as to what the RCV versus ACV policy is. So
Yeah.
We can kind of get into both of our versions, and yeah, let's hear about.
So I'll explain it the way that I usually explain it to homeowners. You know, ACV is the actual cash value. RCV is the replacement cost value. Sometimes different insurance companies have a different meaning for RCV, but it typically functions the same. So as an example, let's say you bought this table 4 years ago for $1,000. It burns up in a fire. Your insurance company says this table has reduced in value by 10% a year. Therefore, the actual cash value of this table is $600. Here's a check for $600 minus your deductible.
Yep.
That is an actual cash value policy. A replacement cost value policy, the insurance company says, hey, your table burned up in a fire. It is reduced in value by 10% a year. Here is a check for $600. If you use this check for $600 to go buy another table of similar value, like in kind quality, bring us the receipt and we will reimburse you the other $400 minus your deductible.
Yep.
So typically when you work with most homeowners policies are RCV policies in the state of Michigan. However, it is pretty common yet to run into ACV only policies, and you really have to watch out for this. An ACV only policy can be somewhat deceptive to a homeowner. Essentially, you're paying for a policy that over time loses its value. As the things on your house age, you might be paying the same amount of money for that policy every single year, but the value that it covers inherently decreases because of the age of the things that you were insuring.
Yeah, that's a great explanation. It's a little more spot on with my explanation than I thought. So I know we've had some differences about that in the past. So yeah, so great explanation of how that works. And the only way I can talk about it a little more is just about how it's related a little more to like a roof, right? So also too, I think it's important that maybe towards the end of this episode, we talk about what you should look for in a policy when you purchase a new policy. So, yeah, so Justin said it very well, actually, so a replacement cost value, you get a roof, right? Your roof is 10 years old. A hailstorm comes, it hits the roof. You have an RCV policy. So that means that the insurance company is going to pay you for a brand new roof in the current market prices at that time.
Yes.
As opposed to an ACV policy, they only owe you for basically what that roof cost when you had it installed originally. That's kind of bluntly the way to put it, right? I mean, essentially, there's a little more to it in how it decreases its value, but essentially that's the way the payout works on it. So
yep, they're paying you out for what it was valued at when you first put it on, and how it had depreciated
now.
Yep,
exactly. It's worth what the roof is, the current condition that it's in now, and what it's worth right now is what they're going to pay you out for on an ACV policy.
Yep.
Not for what you paid for the roof when you first bought it. I'm sorry, I misspoke there. So, and a replacement cost is they're going to give you what a new roof should cost. So if your roof is 10 years old and it cost you $10,000, but your roof's only worth $5,000 now because of how old it is, that's your ACV payment, as opposed to, your RCV payment. They're going to pay you what that roof is worth now. So if we come out there and we say, well, it's going to be $18,000 for a new roof, um, they're going to give you the $18,000 to cover your replacement costs. So that's what you're owed for. So it's very important to understand your policies. We can't get into policy language with homeowners, but we can definitely, advise you on what to look for, and what not to look for, stuff like that. So yeah, so RCV, ACV, pretty simple. I don't know if we made that too confusing, but it's a pretty simple breakdown.
Pretty simple.
So now let's talk about deductibles. So deductibles are a lot of times misunderstood by
Yes.
homeowners.
Yes.
Very, very commonly misunderstood by homeowners. So Justin, we just had a customer in the office, today, and kind of misunderstood the situation with their deductible. It happens all the time if it's not explained to them properly. So Justin, why don't you explain to them how a deductible actually works?
Yeah, yeah. So we had a customer come in and he said, "Hey, I'm ready to do my roof replacement. Don't got to pay my deductible. The insurance company already took care of it." And then we have to say, "Well, that's not really the case." So what ends up happening when you receive your first payment, which is usually your ACV payment? Let's say your insurance company has decided your roof in total is worth $10,000. It is depreciated by 50%. So we owe you $5,000 minus your deductible. So if you have a $1,000 deductible, the insurance company will give you $4,000. Now that is not you paying the deductible. In the state of Michigan, you are required to pay your deductible.
In most cases, a deductible can be, considered a co-pay, because it is your responsibility to pay that amount to the contractor doing the work. So, like Justin said, if it's a $5,000 claim, you have a $1,000 deductible. Well, the insurance company is going to pay $4,000 of that claim, and it is your responsibility to pay that co-pay, that deductible of $1,000 to the contractor. So the job is still worth $5,000. The contractor still needs to be paid $5,000. The insurance company covers $4,000. You cover $1,000 because that's what your deductible costs. So
Exactly.
very, very simple. Once you understand the concept of how a deductible works, it's very simple. But some people think that they've already paid their deductible, because they didn't receive all of that money from the insurance company, and that's where the misconception's at, right? So
Right, correct.
um,
Some people try to circumvent this and they go, "Oh, okay, well, instead of buying a $10,000 roof, I'll buy a $9,000 roof
yeah,
to get over on the insurance company to prevent me from having to pay my deductible." But what's going to happen is you're going to give the insurance company a receipt for that RCV payment,
yep.
and they are going to say, "Okay, here's $8,000." They are going
Because
to
you
reduce.
only paid
Exactly.
$9,000.
They're going to
Exactly.
reduce it again. They're going to make sure that you
Yeah.
pay that $1,000 deductible.
So yeah. So yeah, that's essentially how deductible works. Pretty simple concept. So now let's talk about law and ordinance, which is what I like to refer to as a code upgrade. Verbiage is a little different depending on who you're talking to,
Sure.
but so yeah, code upgrade. Let's talk code upgrade. So I'll just give my quick version. Justin deals a lot more with code upgrades, but quick version. Basically, a code upgrade in your policy. Now, it's important to understand if you have code upgrade in your policy or not. So if you have code upgrade in your policy, what that means is the insurance company is obligated to upgrade your roof to code. So if your roof that you have on your house now is not up to code, and a storm happens, and the insurance company is only obligated to pay for what's existing on your roof now, well, now they're obligated to pay for the upgrades to upgrade your roof to code, to be code compliant in that municipality. So essentially, code upgrade, quick example would be, like ice and water shield in the
Yeah.
state of Michigan,
Yep.
right? So if we tear a roof off and there's no ice and water shield existing, well, that means that right now, originally up front, the insurance company only owes for what's on the roof, a felt paper. They don't owe you for the ice and water shield just yet. But if you have a code upgrade, now they owe you for ice and water as well, because we as the contractors have to bring that roof up to code. And a lot of times, I believe it's listed on your insurance paperwork as paid when incurred correctly.
Yep.
So PWI or something like that, which paid when incurred means you will get paid for that, but you have to have proof that that expense, incurred, right?
Yep.
Essentially. So,
Yeah, so code upgrade and ordinance and law, what that, and you'll see this a lot when your own internal municipality, especially in Michigan, in places like Sturgis is a really great example where Sturgis, that municipality, has laws that supersede what the actual IRC states or the actual code states. They say we follow the code, but for our community safety and standards, we require this as well.
yeah.
And your insurance policy for code upgrade covers that as well.
Yep.
I highly suggest if you're a homeowner, call your insurance company and ensure that you have code upgrade because here's why. I want a big worst case scenario, and it's a worst case scenario, but it's something we run into all of the time. Decking. Decking is a great example. Early days Michigan construction, we could put on all kinds of different decking up there to hold on a roof. Older roofs have decking, gapped decking, which is plank board that has a large gap between. Well, new code tells us that the largest a gap can be in your decking is a quarter of an inch. Anything larger than that, it has to be filled in or it has to be redecked. And I'm telling you now, the cost of decking is immense. Wood was relatively cheap for a long time, but it was kind of up until the invasion of Ukraine that the cost really, really went up. You can be looking at an additional $5,000 out of pocket on top of your deductible, $6,000 out of pocket now to get your decking done and it's required. The roofer has no choice in this. We have to do it. I cannot put a roof over gap decking. I cannot do it. It's going to violate code. I'm sacrificing my license. I'm sacrificing my good name.
Yep.
It's something that we can't do, or something that we can do. So my suggestion is when you're buying a new policy or even the policy you have now, this is exactly what I did. I bought a home a couple of years ago. I called up the insurance agency. I said, I want this insurance provider because I know which ones are the good ones. I want this insurance provider and I have to have code upgrade.
Yeah.
And we'll probably do another episode about this, but I told them I want a fixed deductible.
Yep.
A fixed deductible. I do not want a percentage of my home value. That we can cover that on a different episode.
Yeah.
But ordinance and law, code upgrade, whatever insurance companies call them, different things. Super, super important. I mean, you did a very large project out in Kalamazoo where, at a certain point we had the municipalities telling us like, oh, well, this entire thing has to be brought up to code.
Yes, correct. Yep. So, which could cost thousands, tens of thousands of dollars out of pocket, that you weren't planning for, that you weren't saving for an emergency to happen, a storm to happen, right? A catastrophe, I guess, if you will, to happen. So we're not always ready for those things to happen, so it's important that you have the correct insurance policy. Most people, you hear it all the time, oh, insurance is a scam and whatnot, but insurance is very much needed, especially for your home. And it's a good idea to understand your policy. We're all homeowners. We've all bought policies that we don't even understand.
Yeah.
Most homeowners, most homeowners are just going for the lowest payment. They don't, it's insurance. Like, they don't think that they're ever going to need to use it. So give me the cheapest policy. That's
Right.
typically what they do. And when they choose that cheap policy, they don't understand all of the exclusions that are in that policy. So it might seem cheaper now, but it's going to cost you dramatically down the road, extra couple $100 or $100 a month. Eventually, if you do the math and you have a catastrophe happen on your home, I can tell you right now that your costs out of pocket are most likely always going to exceed, that monthly premium to have a good policy.
Yeah.
So,
yeah, absolutely. I have to say, insurance companies will sell you pretty much any policy you want, but the cheaper the policy you get, the more than likely you're going to end up with an ACV only policy with an astronomical deductible and no bells and whistles like mold abatement or ordinance and law code upgrade.
Yeah. Yeah, just pay attention to your policy. You always want to have a RCV policy.
Yeah.
RCV, to put it into simple terms, everybody knows auto policies, right?
Yep.
So to put it into simple terms, your RCV policy is your full coverage. You want to have full coverage on your home, right?
Yep.
Whereas like an ACV policy is kind of like a PLPD policy, but not even that, because PLPD doesn't even cover your personal property. So, or your property that's damaged, it covers,
Someone else.
someone
Yeah.
else's
Yeah.
property, right? So, but that's how I put it into terms. You want full coverage on your home. That's an RCV policy. So make sure you have an RCV policy. When it comes to the deductible, if you want to go with a cheaper deductible, you have the option to what deductible you want to pay. If you want to pay a cheaper deductible, have a little bit of a lower payment on your monthly, or a higher deductible, whatever you choose with the deductible, as long as you have a flat rate deductible. You want a 500, $1,000 deductible. In Michigan, we typically see $1,000 deductible,
Yep.
which if your roof is damaged and you have a $20,000, $30,000 house or roof, what's $1,000 out of pocket to get that brand new roof, that $30,000 roof for $1,000 copay? It's a
Exactly.
pretty good deal at the end
Yeah.
of the day, right? So, so make sure that you have the deductible that you want to have. That is going to, fluctuate your payments a little bit, but and then also always, always, always make sure you have code upgrade
Yep.
in your policy. We can't recommend that enough. We see it all the time. So RCV policy with code upgrade with the deductible if you're choosing, as long as it's a flat rate fee.
Yep, exactly. There are some unicorns out there. I've seen $250 deductibles out there.
Yeah.
Not as many these days, but
They're
you know,
becoming rare these days. And insurance is getting tougher these days, man.
yeah,
So
yeah,
deductibles are going up. They're trying to switch homeowners to percentages, because the deductible is going to be much higher. Your copay is going to be much higher. They're trying to exclude coverages, like metal. They're trying to take certain things and exclude certain things off of your policy. So, just be fully aware of what type of policy you're buying
yeah.
before you buy it. So,
And that,
and they're even trying to exclude hail on some of these policies.
yeah,
So
I bet.
absolutely do not opt for a hail exclusion, because if you get a hail exclusion, because you may not think that that's important. Oh, if I do get a hailstorm, the chances of it making my roof leak are slim. Blah blah blah. So you don't want to have a hail exclusion in your policy. That's another thing, another trend we're seeing. I know it's becoming popular in the South, and it's kind of working its way up north. So it's a bad thing.
Yeah, you see it a lot with people who have metal roofs. We covered this in another episode that hail can absolutely damage a metal roof. It can void your warranty. It can damage the Kynar paint. It can damage the way that it seals. So really important. Watch out for exclusions. Know what you're buying.
Yeah.
Talk to your agent and know what you're buying. A lot of times, if you go to kind of a I don't want to talk ill about any company, but if you go to like an insurance farm where you think you're paying this company, but you're actually getting coverage from somewhere completely different, you have no idea what you're buying. So just make sure you're informed and keep yourself abreast. And if you want more information about this, come to our website, reference our blog, look for the things to look for when you're purchasing a policy.
Do not fall for the cheapest policy. Who's got the cheapest policy for me? Do not fall for that, because cheapest is always going to be the most expensive in the long run.
Exactly.
So,
Yep. Anyways, guys, thank you for coming to our podcast. If you liked it, share it, give us a comment. I promise we'll talk back. Talk directly to us. If you have recommendations for some subjects you want us to cover or things you want to learn about, drop us a line. We'll absolutely do it. Anyways, thanks, guys. Appreciate it.